Have you ever noticed that suddenly, just completely out of nowhere,
Money just feels so much harder to get. It's like most of us don't even realize what's happening until the economy is already hitting the brakes. Here's exactly what that looks like.
First, people just stop spending. Then, businesses start to struggle.
And then, jobs completely disappear. Boom. That is exactly how a recession begins. It's a classic cautionary tale, right? 1 minute, everything's totally normal. We're shopping, companies are hiring, money is moving freely. Then suddenly, it just shifts. Companies are slashing jobs, everyday people are spending way less, and this extreme financial stress just sets in across the board.
So, let's talk about defining a recession.
Basically, a recession is just when economic activity slows down. Think of the entire economy like a massive, powerful engine. Normally, it's got this incredible forward momentum keeping us all going. But a recession, that's when the engine starts sputtering and just violently loses power.
And this creates a huge domino effect. First, everyday people buy less, right? We start prioritizing only essential expenses. Second, businesses earn less. You'll see small businesses frantically trying to adapt their operations just to survive the contraction. And third, bigger companies start hoarding their cash, which just tightens up the entire economy.
Next up, real-world impact, hiring decisions.
Because businesses depend so heavily on consumer spending, things get serious really fast. When profits drop, companies go into pure survival mode. To protect themselves, they'll completely freeze hiring, they'll cut salaries, or they'll just lay workers off entirely.
which brings us to the dangerous economic cycle. You see, this vicious cycle escalates so fast. Week 1 brings sudden job losses and a whole lot of fear. By month 1, spending completely freezes up. Give it to month 3, and businesses are literally starving for revenue. Hit month 6, and you're looking at a massive, widespread economic slowdown.
And this isn't just news on TV. It affects absolutely everything in everyday life. Jobs, small businesses, your strict monthly household budgets, and yes, even how market shifts impact your personal investment strategies for long-term growth. It all takes a direct hit.
And remember this cautionary point. Even people with super stable incomes are going to feel the squeeze. Prices shift, credit tightens up, and honestly, nobody is entirely immune to it.
So what can we actually do about it? Well, I'm Coach Kobo, and I want to walk you through my financial survival steps so you can navigate this exact scenario.
Step 1, absolutely avoid unnecessary debt. Step 2, and this is crucial, aggressively build up your emergency fund. It is literally your best armor for surviving economic downturns. Step 3, spend carefully and actively manage that monthly household budget. And finally, prioritize strict financial stability over any risky moves.
Because when money suddenly gets tight, preparation is what matters. Look, you can't control the global economy, right? But you can absolutely control your own readiness. Being prepared is your absolute key to surviving these financial downturns.
So, now you know why money just seems to vanish during a recession. The big question is, are you prepared for when that engine stops? Subscribe to Deez Finance for more insightful videos.